This is Matthew Cratter from Bitcoin University, and today I wanted to answer the question, is Bitcoin security doomed? This is a question that Justin Bond has been asking. A lot of you have sent me this tweet thread, which really got a lot of views and a lot of interaction. It's a fairly short tweet thread, so I wanted to read it to you. Bitcoin has to double in value every 4 years for the next century or sustain extremely high fees just to maintain the current level of security. Such growth is impossible since it would exceed global GDP in 33 years based on current price. Therefore, Bitcoin security is doomed. This price doubling would have to continue for another 80 years until the security budget runs out completely. If you understand exponentials in economics, you should know that this is entirely impossible. Fees will never reach sustained extremes due to a ratcheting effect of the fee market. Paying hundreds of dollars for a single transaction is not realistic in a competitive market. Now, if you look on Twitter, Justin is always doing threads like this about the death of Bitcoin. I'm sure that Justin is a great guy in real life. The problem is he's just been kind of wrong about almost everything for a long time. So back last year when I was warning people about the death spiral in Terra Luna, Justin was telling people how Luna is great. It's got a self-funding mechanism and it's a solid competitor. Justin has also been predicting that Bitcoin Cash, Tezos Dash, would flip Bitcoin. This is one of his tweets from June of 2019. If we take a look at what has actually happened since that point, Dash has completely collapsed versus Bitcoin. Tezos has completely collapsed versus Bitcoin. It looks like he has a history of being a big blocker. He was really on the wrong side of the block size wars back in 2016, 2017, and he really was a Bcasher. I think at least until recently, he talks in this tweet from January of 2020, Bcash has the most legitimate claim to the Bitcoin name, blah, 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 blah. Here he is at a conference pushing Bcash, talking about the lack of Bitcoin sustainability, how its security budget is broken. Sounds familiar, except this was back in September of 2019. So let's take a look at what's happened to Bcash versus Bitcoin. We can see that's collapsed versus Bitcoin. As this chart moves down, that means BTC is strengthening against Bcash. If we scroll out, we can see really what a disaster it has been. Justin also says that Bitcoin has been completely obsoleted by competitors and that it fails to be competitive in every possible way. He says if there were trade-offs, both could exist. Unfortunately, that is no longer the case. Now, here's a hint. You should probably ignore people who say that trade-offs don't exist. There are always trade-offs in both life and engineering. For example, here's a trade-off. In April of 2016, you could have chosen to invest in Justin's hedge fund, his crypto hedge fund, or you could have just bought BTC. Now, Justin's hedge fund, it's called Cyber Capital. He says it's Europe's oldest crypto hedge fund, which I don't know if that's true. It may or may not be true. And if you go to their website, you can see the fund is actively managed, rebalanced monthly, and seeks to outperform Bitcoin. This is its sole goal. Let's see how well it's done. If we scroll down here, we can see, first of all, the fees are very high, as it is with many of these hedge funds. I know because I used to be in this space. 2% annual fixed fee, it's a percentage of AUM, 20% of profits, and then a 2% redemption fee, which is pretty outrageous. Cumulative performance looks quite good since April of 2016. Remember, we're talking about trade-offs. And so you have to compare if this is a hedge fund that's intended to outperform Bitcoin. Let's see how Bitcoin has done since April 1st of 2016. Bitcoin is up 7,271% versus 5,708%. So this hedge fund is massively underperformed Bitcoin, in addition just to Justin backing the wrong horses, backing Bcash, etc. So I don't want to pick on him too much, but you have to understand the background of these people and why he might be really mad at Bitcoin, why he may have supported Bcash, been on the wrong side, and now spends all his time trying to get publicity for his hedge fund by writing these doom and gloom tweets when he doesn't have a very good track record in this area in terms of predicting winners. If you're enjoying this video so far and you support my mission of Bitcoin education for the world, I just ask you to hit the like button, hit the subscribe button. Now, there are many different aspects to Bitcoin's security. Remember, we're talking about Bitcoin security being doomed, and I'll go over a couple of them. This is in addition to Bitcoin mining, of course. There is one aspect of Bitcoin security is just an incredibly smart and increasingly wealthy global community of freedom-minded individuals who know how to think for themselves, who are increasingly willing and able to do almost anything to protect and strengthen Bitcoin. So I would say, first of all, never underestimate this social layer or its strength. This is something that Bcashers don't have, that Dogcoiners, XRP Army, they just don't have it. They don't have the same quality and caliber of people. Number two, cryptographic security. Again, we're talking about Bitcoin security. It takes many different forms. Brute forcing someone's Bitcoin private key is like guessing a single atom in the universe. So it definitely has security on the cryptographic side in terms of public-private key pairs. And it has wonderful features like multisig, for example, which provides even additional security for people who hold Bitcoin. Number three, the Bitcoin network has nodes in every single country on Earth, run by sovereign Bitcoiners, not run by a company like Infura, not run by venture capitalists, but run by real Bitcoiners who hold Bitcoin, and this is why they run a node. By contrast, most Ethereum people rely on Infura, MetaMask, Amazon Web Services, other big corporations to run their nodes for them. Finally, number four, Bitcoin has been around longer than any other cryptocurrency. It's been attacked by governments, terrorists, criminals, hackers who've never been able to bring down the network, even do a temporary 51% attack. This has never been done, or even brute force a Bitcoin address and steal the Bitcoin. So this, in fact, tells you a lot about Bitcoin security. So this is really the hypocritical thing about Justin. While he supports forks of Bitcoin like BSV and BCH, which we can see, these are failed forks, but he supports them nonetheless. While he writes all these long tweet threads about them, he writes these other tweet threads about Bitcoin's security. And why doesn't he write threads about Bcash and BSV and their security? And these are coins that have actually experienced real 51% attacks, as we can see here. BSV, Bitcoin Satoshi Vision, a failed project, rocked by 351% attacks in as many months, and the same for Bcash. So this really tells you where his loyalties lie. But let's get back to his original tweet thread. Bitcoin has to double in value every 4 years just to maintain the current level of security. Such growth is impossible since it would exceed global GDP in 33 years based on current price. Now, even that metric is a little bit misleading because global GDP is a nominal number. In other words, it includes inflation. As the global economy grows due to the prices of goods and services moving up, global GDP moves up, even if there isn't any real GDP growth. And so if we were to see very high global inflation rates, especially a high inflation rate for a global reserve currency country like the US and other US dollarized countries, then global GDP can move up a lot. So it's not like it's a ceiling that we're going to bump up against. Global GDP, as I said, is just the sum of goods and services, final goods and services sold worldwide. And so if we have 10% global inflation, for example, global GDP will move up 10% or more every year. There's obviously a real component, real GDP as well, which is a function of technology and productivity. But even if we don't have that, if we just have pure inflation, you will still get global GDP moving up. So you can have a situation where Bitcoin's price keeps moving up and Bitcoin's market cap still gets nowhere close to global GDP. I just wanted to point that out. But I think the real critique of Justin's thread is this idea of the Bitcoin transaction fee market not being able to take over and replace the miner block subsidy. He says paying hundreds of dollars for a single transaction, in other words, a transaction fee, is not realistic in a competitive market. So miners currently, Bitcoin miners, they get a block reward for every block that they successfully mine. And this includes two components. It includes the block subsidy, which is currently 6.25 Bitcoin, but is slowly going away. It's getting halved every 4 years. It also includes transaction fees for every transaction that is included in that block. As we said, the block subsidy continues to get cut in half every 4 years. This is what's called the halving or the halvening. Eventually, transaction fees will need to provide most of miner transaction as this block subsidy trends toward zero. Justin says paying hundreds of dollars for a single transaction is not realistic in a competitive market. And I would ask him, why is that? Why doesn't he believe in free markets? We have Bitcoin block space, which is limited. If demand for that block space goes up a lot, why couldn't transaction fees go up a lot too? Does Justin really believe that no one would pay hundreds of dollars in fees to get final settlement for a $5 million transaction or a $50 million transaction or a $5 billion transaction? You have to compare this to the cost of other bearer assets like physical gold. For example, what does it cost to send $5 billion worth of gold from Tokyo to Paris? I would suggest that it costs millions and millions of dollars. In other words, a lot more than just a few $100s. And again, you have to compare apples to oranges, apples to apples and oranges to oranges. You can't compare Bitcoin to PayPal, which itself rides upon U.S. banking rails, U.S. banking system secured by proof of war and bombers and aircraft carriers, etc. By contrast, Bitcoin is a bearer asset, no counterparty risk, and it's in many ways like physical gold in this way, but much better. I'll link to this video in the description notes below, in which I talk not just about Bitcoin's speed in terms of transactions per second, but also this idea that Bitcoin is going to end up being a final global financial settlement layer, like Fedwire, like gold used to be, and that it will scale not just by having larger and larger transactions, but also by settling these transactions, offering final settlement for global transactions as a way, for example, of settling trade imbalances. And then for smaller transactions, these will scale using layer 2 solutions like the Lightning network, for example. Opening and closing of Lightning channels obviously will also provide Bitcoin miner transaction revenue. So over the past 14 years, the market itself has decided how much security Bitcoin needs and how much that security should cost. No one needed to consult an expert, a quote-unquote expert, I should say, like Justin Bonds, to determine the proper level of network security, which leads us to this. I'll sort of restate it. The myth is that Bitcoin will fail because no one will be willing to pay high transaction fees. I think this gets it exactly backwards. Bitcoin won't fail because transaction fees get quote-unquote too high. And what does that even mean in the context of a free market? If that's where block supply and demand for transactions meets, who are you, who is Justin, to say that fees are quote-unquote too high? Here's the reality. Bitcoin will fail if people stop finding it useful. Then they will stop paying fees, not because they don't like high fees, but because they don't like using Bitcoin anymore, because they no longer find that they need censorship-resistant, neutral, decentralized, scarce digital money anymore, money that's not issued by a corporation like XRP or Ethereum, a corporation hiding behind a foundation or something like this, as we see with Ethereum and Cardano, etc. But if they want truly neutral money that's not issued by a corporation or a small group of people or by a government, Bitcoin is really the only solution out there. And so it seems unlikely to me that people are going to stop using Bitcoin anytime soon, especially in a world where CBDCs, central bank digital currencies, are in the process of being shoved down everyone's throat. So this is the actual reality so far. People seem to find Bitcoin useful and use it a lot, even in a bear market. So for example, here's a tweet from Pierre Rochard. This is back from February 20th of this year, so it's a little outdated already. But even at that point, Bitcoin had settled $850 billion worth of transactions across 43 million outputs. And so we can see that it's doing roughly, call it $130 billion worth of transactions per week. This is unbelievable if you think about it, especially when you think of how new and young Bitcoin is. So what if I'm wrong? It's not like the block subsidy goes away overnight, the 6.25 Bitcoin. There's no cliff, but rather a gradual decline as we have these halvings or halvenings. So next year, depending on block speed between now and then, block time between now and then, sometime in April or May of 2024, the block subsidy will get cut in half from 6.25 to 3.125 Bitcoin. 4 years later in 2028, it will get cut in half again. This brings us back to Bitcoin's intelligent social layer, i.e. Bitcoiners like you and me. Justin seems to think that smart and wealthy and freedom-minded Bitcoiners are just going to sit back and watch Bitcoin fail, when in fact, obviously nothing could be further from the truth. When you have thousands of dollars or millions of dollars or billions of dollars worth of Bitcoin, you're going to be paying attention and you're going to be doing everything you can to help support the protocol. If changes to the protocol need to be made, even if that's a highly unlikely and improbable situation, if it turns out that they do need to be made, it will become quite clear to everyone and a social consensus will form. And Bitcoiners are highly incentivized to keep Bitcoin safe and secure, to continue to secure their value and their savings. So while Justin continues to bounce from one fad coin to another and continues to denounce Bitcoin as a way of raising money for his fund, which continues and will probably continue to underperform Bitcoin, we Bitcoiners are just going to continue to focus on Bitcoin. We'll continue to focus on protecting Bitcoin and building on Bitcoin. And I think for this reason that Bitcoin security will be fine. We have nothing to worry about. It's a dynamic, evolving protocol. There are many moving parts to it that I haven't even spoken about in this video, including the difficulty adjustment, talking about even with 51% attacks, the very limited damage that they can do. I've talked about this in previous videos as well. So maybe we'll cover that more at a later time. But I'm convinced, especially in the context of these repeated tweet threads, just banging the same drum again and again, that Justin Bonds is wrong about Bitcoin security budget in the future for transaction fees on Bitcoin. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.